Hello and welcome to another update video about silver before the new trading week starts. So starting with a long-term view, nothing changed here. So just for everybody who's new on the channel, expectation is that from an Elliott wave point of view, we had a first impulse here in 2011. This whole period was a very, very long and draining wave 2 correction, actually taking more than, oh no, not more than, but nearly 10 years. Then we moved up here in a smaller, basically in this 1-2 in white with the brackets, we would now be in the wave 3 that will land somewhere up here around $80, ideally, maybe higher. But within this wave, we have completed the first wave already, and we are now in the wave 2. Again, that will have a 5-wave move, which means that move to get there will consist of 5 waves in itself. That is always the so-called impulsive move that you need in the direction of the higher level trend. So it will unfold in something like this in 5 waves. It will get messy. Each of these waves has subwaves as well. So it's never easy to really look at it, but that is basically the higher level picture. On the daily, we can see that we are so far, we've reached my target area, by the way. Yeah, when I started to cover silver, we hadn't reached it yet. I think we were just above $20. Told you we are going to sell off more. Still don't think the sell-off is finished. This is basically tied to my gold analysis as well. With gold, told you in February already that we'd get into the current price ranges. Back in the day, we were at around 1980. So we're now just below 1700 or around 1700. But here you can see ABC correction with various subwaves. What is interesting for us is this last element here. We can go to the 4-hour chart. You can see that in the last video, I gave you here a more specific target area within the broader range, because this broader target area is ranging between $13.70 to $18.60. Only in the case that we really drop below $13.70, we will go to maybe a single-digit silver price. Now I can't see that at the moment. By all means, I think we're going to reverse somewhere here within this sort of bluish area within the green one. That is the more specific target area. We need to be aware this larger target area is based on Fibonacci retracement levels, the levels in which you would normally expect in a larger wave 2 correction the price to reverse to the upside. Now, of course, this is a pretty large one. Anywhere in here, theoretically, yeah, the price could turn around and reverse to the upside. So don't be surprised if at any point the price is now reversing to the upside. The lower level wave count, however, suggests this is not yet complete. Yeah, also the price action doesn't justify it yet, that we get more optimistic here. Therefore, we've got this more specific area, also based on Fibonacci extensions in this case, that would land within 1560 and 1690. Yeah, this is where more specifically we can consider the price or the correction to be finished. Always be aware, sometimes the prices don't quite reach those areas. Yeah, it's all probabilities, it's never certainties. But from somewhere in here, I would expect the reversal. Now we can have various trend lines we can draw here that will help us understand when this overall correction is finished. So a breakout above this trend line would strongly indicate that it's finished. A breakout above this shorter time frame trend line, because we're moving down in a channel at the moment, would also indicate that it's finished, and we need to be on high alert for a further breakout to the upside. Okay, now within this lower level, yeah, you can see that we have subwaves. Where are we in terms of these subwaves? I'm not gonna explain all the subwaves that we have here, but from here, yeah, we can count this as 1, this here as a wave 2. Then we come down here in a 3, we have to count this as a 4, and then we are now in this 5th wave to the downside. That is not finished yet. That is not finished yet, so we're waiting for further. There are various ways how this can be counted with subwaves and stuff, but point remains that the expectation is that we haven't finished it yet, especially as we've broken out, not yet broken out of this channel yet. And a key level, yeah, a key level that we would need silver to get above. And let me zoom out a little bit, in, you know, also to be more optimistic. Obviously all of this you know, any of these reversal signals will build a case that the low is already in. And again, I don't think it is very clearly, but we've got, let me just close the window, there's a bit of noise outside. Key levels here for silver. That previous wave 3 low at $20.50, that will be highly relevant, because this has been here important support. And then also here on the way up, we've got the range. It's a bit of a range here, to be fair, but let's say around 21.50. Yeah, this is another one that we need to get above. All of these will provide resistance on the way up, but you can see how the chart is pretty much divided into two pieces. Yeah, it's this area here above 21.50 where a lot of the price action, or the corrective price action, played out. Getting back above that level would indicate that this overall correction is finished. And again, first signal would be a break above this short-term trend line, then the longer-term trend line, then this 20.50, and then the 21.50 level. And it's up to you to decide what you're comfortable with, or if you just blindly try to accumulate here in this area, which is another strategy, dollar cost averaging in, of course. But I can tell you, I don't think the overall correction is over yet. At the moment, it feels a bit like trying to catch a falling knife without any confirmation that it's starting to reverse. Okay, and that is my view about silver. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, maybe check out my main channel, More Crypto Online. Thanks a lot for watching. Bye-bye.